I am regularly asked, is now the time to buy stocks that have been hit hardest by the contraction? And of course, by the contraction, we mean the bear market that ran for approximately exactly a month between the third week in February and the third week in March. My opinion is, knowing that I can always be wrong, that no, it is not. And let me put that into this context. So far, this bear market, and it clearly is a bear market because it's been big enough, peak to trough, to qualify as a bear market by any magnitude standard, hasn't acted like a bear market, in that normally bear markets peak relatively slowly and grind down, and then in the last approximate third of their fairly long duration, 9 months to 2+ years, panic sets in and you get 2/3 of the magnitude drop in the last 1/3 of the time. This time, straight off the top, we got the fastest drop ever to a bear market, simply the fastest ever. And in that regard, it acted more like a correction and has since than a bear market, in that the things that were leading before the drop began have, not every day, not every week, but most of the time, led on the way back up. That's the way corrections tend to act, not the way bear markets tend to act. This bear market's acted more like an oversized correction that wants, in the way that stocks are often prone to think as far as 30 months into the future, wants to look beyond this whole decline as if it were to skip it. Is that necessarily right? Not necessarily, because if the clampdowns, governmental clampdowns to constrict activity in the name of protecting us from the virus, continue longer, stronger, and worse, we may well see another down leg. But if we see another down leg, those same portions that have done worse in this downturn, smaller and more economically sensitive value stocks, will continue to do worse. They normally only bounce best in the first phase of a bull market, which they do regularly, when that first phase of a bull market is coming fairly far into an advanced recession that everyone feels around them has no hope for recovery. Might we be there in the future? Yes, but if we're to be there in the future, between now and then, to the extent that you own stocks, you're still better off owning the kinds of stocks that have done best, which are the big, high-quality, mega-cap, growthy-oriented stocks with big, fat gross operating profit margins that are best suitable to weather any storm, because in that environment, they would also go down less. And you have plenty of time to decide, if need be, to shift from those into the ones that have been hammered most. For now, my advice would be, stick with what's been winning for the last few years.